You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And this week we've got a pair of interviews for you. We got America's Credit Union CEO Scott Simpson helping us set the stage for the Government Affairs Conference coming up at the very beginning of March. And then Sandy Hansen of Barlow Research has got some great new and pretty surprising, in my view, data on how small businesses prefer to work with financial institutions. So we'll be getting to both of those in just a minute. First, we'll remind you can always find out more about the Best Innovation Group by checking our website, big-fintech.com. One of the things we'd like to point your attention to is our CU Town Hall. The monthly event will be taking place this month on Wednesday, February 18th, 3 p.m. Eastern, noon Pacific. If you've listened before, you know the drill. It's free to attend. We hope you bring your thinking cap and participate in the conversation as we hash out some of the key issues facing credit unions these days. You do need to register in advance, though. cutownhall.com. You can go there and request an invitation. You'll find a way to get there if you go to the Best Innovation Group site as well. We will have a guest this time. Brian Bodell, the CEO of Movement, will be joining us, old friend of both the Big Cast and the credit union industry overall. If you're not familiar with the name Movement, he used to be with Digital Storefront. That is a rebranding. Movement has changed names just recently. And he's got lots of great stuff to share. Brian's been in the credit union space forever, and he will be telling us about what Movement has going on. But more specifically, I think it's a great conversation about the trend towards service providers, CUSOs, and the investment community in terms of how they're looking at opportunities within the credit union space. So hope you can join us on Wednesday, February 18th. A little bit further down the road, both literally and figuratively, CU Unplugged, coming up at the end of March 30th through April 2nd. That one's an unconference, in person, being held at Visa's Market Support Center in San Francisco in the Mission Rock area. Really cool facility and worth a visit in itself. But I think the content of this unconference will also be more than a good enough reason to get out there. cu-unplugged.com is where to find out more. And again, Best Innovation Group site will get you there if you go there first. I'll let you just go out to the site and find out more. But like I say, it's a new spin on conferences. We're holding it in Best Innovation Group in collaboration with the Defense Credit Union Council, but it's open to all credit unions. And specifically credit unions. There are opportunities if you're interested as a CUSO or a service provider, get in touch, but the audience is primarily focused toward credit unions on that one. So check that one out as well. Here we are, it's early February, and the fire hose is still really turned up to full stream with events going on in the space. The really oddity to me is our 2025 bingo card, which we talked about quite a bit, the events that we thought were worth watching to see if they would happen last year. And we did wind up with a couple folks with bingo on that one. But the card, several of our items have suddenly sprung back to life. Things that we were watching for looked like they weren't going to happen. And guess what? We're hot and heavy on them. We've talked already about the 10% credit card rate cap that's been under consideration, has been tweeted about by Donald Trump. The Credit Card Competition Act, which is, I don't know if you want to say like a ride along on that one. Also coming into attention, both very much in the line of sight of America's credit unions. We'll be hearing from Scott Simpson about both of those in just a second. And for now, looks like the immediate threat has kind of been pushed back, but don't rest. Those things pop back very quickly, but we'll be looking at those. Another one that came up this last week that was kind of on the bingo card last year in an indirect way that I found fascinating. You may have seen PayPal had a major stumble. They replaced their CEO, who had only been in place for a couple of years after Dan Schulman's long run there. And that was after they missed earnings and both earnings and revenue and had to kind of do a reset. You probably also know they've gone really heavy in the advertising space with that Will Ferrell campaign over the last 7-8 months or so. So that's a big twist there. And the speculation, here's where it really gets interesting. The the stock price has tumbled dramatically. It's down more than 40% over the course of the last several months. Um, they are now sitting at a low enough price that the speculation that I've heard, and who knows, this is pure speculation, but it's been getting some play, and it kind of has a ring of some truth to it if you kind of just follow history. That if the price goes low enough, this may be an interesting acquisition target for Elon Musk. Uh, Remember that he went out and bought Twitter when the price was right. That currently PayPal's market capitalization, based on their recent tumbles, is down to $37 billion. That sounds like a big number still to me, but 37 billion is not necessarily all that big in the financial world. Elon paid 44 billion for Twitter, and I gotta say, it looks to me like PayPal's worth a lot more than Twitter. Now, one of the things that Elon's been trying to do after rebranding, he's been really hot on the idea of a super app that would be X Money. One of the things we were watching last year, because he said he was going to do it, he claimed it would be out by late last year, was launch X Money, a super app that actually handled your financial services needs as well. That really hasn't happened. PayPal would pretty much give him the opportunity to integrate those two and make that happen. He just integrated SpaceX with his AI operations. So who the heck knows what might be coming there? Kind of thing we might be talking about at CU Unplugged, just to kind of tie the whole thing together. But let's go back also to our main event. One of our two main events in terms of the interview is America's Credit Union CEO Scott Simpson was kind enough to talk to us and really kind of give us the lay of the land as we head into government affairs conference season. I'm here with Scott Simpson, the president and CEO of America's Credit Unions, to talk about GAC, the Government Affairs Conference, coming up at the beginning of March. Scott, obviously this is not your first GAC, but it will be your first GAC as the head of America's Credit Unions. And I guess I just turned it's even more recent than I thought. You're about 90 days into the job.
That's right.
And
90,
how
90 days.
Any thoughts in terms of how any impressions, first impressions, surprises, what have you seen so far that it may inform your approach to GAC?
Well, I can tell you that one of the things is just kind of gratifying and I guess validates what I felt at a very local level. But the national credit union family is just as cool as the local credit union family. That's the I think the part that is most gratifying about the job. It's intense. I mean, I for weeks I've been telling people it feels like a cresting tsunami sort of coming at me from this moment I started. Just the breadth of the organization, the desire on the part of credit unions to be connected with the leader of their national trade association. I don't think it has anything to do with me, but they just, it's the connection with their national trade is important. And then the pressures under which credit union leadership operate, they are they're managing extraordinary burdens as highly regulated institutions, and then you've got the political environment that just seems to be very unpredictable and for the first time coming right at us. So all that stuff is sort of combining right now in this moment, the front end of 2026, that sometimes at the early part of a session of Congress or every year it feels like the members of Congress are trying to find their way to the bathroom. Not so for 2026. They hit the ground running. The president has thrown down the gauntlet. There's lots of things already churning for us, so we're not waiting. We'll have plenty to talk about.
Well, coming into an organization like this for the first 90 days is always going to be a tall order. But yeah, with everything that's going, we can get into some of the specifics, from a legislative standpoint and whatnot. If you could remind people, your background is California, Nevada League. Can you just mention a bit about what brings you to this job?
Yeah, the last 2 years I've been working in California and Nevada. I've been working in the credit union space for 23 years. I started in Utah and continued working in the Utah League, but I kind of took on a fractional leadership role in California for the last almost 2 years. of my time as a league president. So, yeah, it's a prior to that. I worked in the political and public policy space. I worked for a while for Senator Orrin Hatch in D.C. I was the executive director of the Utah Republican Party. Did a lot of work in campaigns and elections. Yeah, all kinds of electoral analysis for redistricting, all kinds of stuff in that world. And it was that tool set that I think the Utah credit unions were looking for when they came and asked me to be their leader. They were in the middle of just getting throttled by Zions Bank in their state legislature. It's a super regional bank headquartered in Salt Lake City, and they had declared war on the credit union business model. And that's what I've been engaged in for a quarter of a century now. And yeah.
That sounds like on both sides of the aisle, I guess, so to speak, both from the
Oh, yeah.
legislative side and the credit union side. You've got both covered. So that sounds, and particularly, hand-to-hand combat with that kind of a standpoint, that also seems like it fits well with the space. Let's just jump into the advocacy thing for a second then, because the 10% credit card interest rate proposed cap, the Credit Card Competition Act, we still have the at least in Illinois and a few other places, the interchange prohibition on taxes and tips and things like that. I mean, there's no shortage, and as always, you're still at some points, as you say, trying to just explain to some of the legislators, exactly why this stuff's important and what a credit union is.
Yeah, I mean, for anybody, lawmaking's never finished, regardless of the industry. No matter as citizenry, that there's never a point where we can spike the football and say we're done. It's just going to be ongoing, and we're in a highly regulated industry. We've got well-funded adversaries that are devoted to kind of ending this business model. And as long as that's the case, we're just going to continue to have to push and be playing a very aggressive advocacy program.
Best defense is an offense.
Yeah, I mean, what's interesting is I hear that a lot in the space is we need to be on offense. We're not playing defense. And what's tricky about that is you don't get to pick when you're on defense.
Good point.
Right? Defense just is. It happens, and we just lived it. And here we are. Now it was just 3 weeks ago when the president, I think it was a bit of a hip shot, just sort of threw out the idea of a interest rate cap for a year.
I remember it from the campaign, and it kind of went quiet for all of 2025. Kind of thought it had passed, and then boom, there it is.
Yeah, and I think it caught big chunks of his own administration off guard. I think there are political reasons to take a position like that, but then there are genuine economic and business reasons that end up challenging some of the political justifications. And that put us in a position of having to act quickly on that issue. And then there appeared to be this pivot to interchange, and I think the vice president probably had a role to play in that, given his legislative track record with that issue. But the pivot to a Credit Card Competition Act as a potential outlet for that same populist play.
It felt like it almost softened things up, where that seemed almost like a softer middle ground.
Yeah, and in spite of the fact that the 10% interest rate cap had the noble aspiration of trying to provide relief to the American consumer, which we are at our core sympathetic with that, right? Interchange is completely unrelated to the consumer. I mean, that's a transfer of wealth, right, to the merchants. That's a induced revenue stream for the change for the merchants. And
folks like us understand that, but good luck trying to get that message out.
Right.
Right.
That's one of the big challenges is, we've kind of led with this being, calling on our credit union leadership to help us have this conversation, because consumers can't and don't want to sort through the nuances of the interchange system But for some reason, these two completely unrelated legislative issues have been stapled together
Yeah.
by the president. And so here we are having to deal with that. And we had this very urgent need to engage there was a committee threat, an attempt to try to introduce that bill in the Senate Ag Committee just last week. We were successful, along with counterparts across the retail financial services space, to push back on that, and we're able to put that to bed for now. But I think between now and the GAC, and at the GAC, we're in the long-term play of making sure that policymakers have a clear-eyed view of the negative implications of either one of those issues, and then the legislative opportunities that are also out there to help improve Americans' lives. That's sort of been our talking point for the last couple of weeks. Is I think maybe Anthony Demagon on our team coined it, but he said, we don't need an interest rate cap. All the president needs to do if he wants to help Americans is give them directions to their credit union. Like that's the populist solution to affordable credit access, is to go to your credit union. And so we're already closer to the aspirations that the president intended, without all of the downside of price fix.
Yeah.
So
and
it's a good opportunity.
Yeah, you make a great
It's a good
point too.
opportunity.
I was going to say, you can't even, I mean, I'm not even going to try to mention where we're at today relative to a week from now when this actually posts, but now a month from now when we actually get to GAC. There's absolutely, the way this environment's going, no way to predict where we're going to be.
You're exactly right. It doesn't matter. In fact, I've been telling everybody for the last week, including my own staff, we have this desire to put into the hands of attendees, charts and graphs, paper, like things that require pre-production, right? Everybody wants to be ready for that. And I've just said, look, we've got to leave white space in here. We're going to be making game time decisions on what we're talking about and how we talk about it. Because you can see that things change on a dime, like that, credit card rate cap had the aspiration of a trigger being pulled on January 20th, you'll recall, and that all came and went, and so that's the nature of DC. Is there's a shorter attention span on issues, and there are a lot of things that try to claim the attention span of the American news media. We're subject to that, and frankly, I think a slower pace is better for us because of the nuanced nature of these issues. That when we have the opportunity to explain the real impact of these things, we do better. And I think velocity is never the friend of lawmaking, right? It should be a slow, deliberate grind, and that's what we're doing right now, and have done for over a decade with interchange, right? It's this continual sort of push back, and that application of that political pressure and facts end up with better policy making.
Well, it sounds to me, and I think you've kind of alluded to this a little bit, the hike the hill component of GAC is probably as urgent as it's ever been. And as you say, it's kind of difficult to prepare for it because
well,
it's gonna be the very last
for
week. Can you
me,
say a bit about that process and how you see it kind of playing out this year?
sure. And I mean, I'll say this with all the love and admiration that I can for the credit union ecosystem that gathers in Washington. But it really, we're coming to Washington, D.C. for a reason. If it was just to get together and, meet at the bar and have some good food and education and training, we could hold that in Orlando. We are coming to Washington, D.C. because we are trying to get the attention of policymakers, and that's hiking the hill. And so I think that in my view, that's the most important work we're doing that week, is to get in front of policymakers and have them understand the absolute requirement for them to respect and recognize the value that cooperative finance means in the lives of their citizens, the voters, the constituents that they represent. And that's our job. We are stewards of this social movement that's 120 years old. And if you think about the collective value that's been developed and deployed in the lives of Americans, middle America for that century, and what that can mean for the meeting the needs of people who are struggling to find their pathway to economic freedom here, the great American dream. It's as serious as it gets. If you stop and think about what we're about, what credit unions are trying to do, this is as consequential a conference as there is. And so I'm not suggesting that you shouldn't, meet at the bar and go have make irresponsible nutritional choices at fine restaurants, and socialize with our friends and learn best practices and connect with vendors. All of that stuff is fantastic. It all should be subordinated to our stewardship of protecting this business model on behalf of 145 million Americans.
And the components at the Walter Washington Convention Center pretty much wrap up by midday on Wednesday. But as you're saying, that's kind of when you just get started. And it sounds like we have more feet on the street than ever. I think we're going to have a new record, it looks like.
We do. There's 535 seats, right? There's 535 offices that we should go talk to.
But we've got more people to deploy to get out there too. It sounds like
there's going to be over 6,000 people in town. We have the capacity to have them feel it, and they should feel it. We just need to make sure that everybody makes their way. And here's the great thing is we've got this amazing grassroots system that includes state trade associations, these local entities that already have proximity to their elected officials. They understand the nuance of how the communication should go. They're all coming to town. They're prepared. They bring the hike the hill sort of planning processes. And then the credit union leadership already have these brand equity positions in their communities, right? They already know the lawmakers. They've spent time developing those relationships. We just need to take advantage of the moment. They're going to give us the attention span we ask for. We just need to go fill it and make sure that our message is distilled and powerful and capture the attention span that they're willing to give us that week.
Given the attention span, as you say, it still has to be something of an elevator pitch. You can get a little more nuanced, but you still have a relatively limited window through which to make that impression.
Yeah, if you think about if I apply my own attention span to those moments, and there's one or two takeaways, that any given policymaker hasn't. You have to think about it from their perspective.
Yeah.
I mean, I worked on the Hill. I have a pretty good idea of what goes on before, during, and after these constituent meetings, and they may meet with 8 different constituent groups that day that are doing the exact same thing that we are. Not probably on the same scale that week that we are, but because we're kind of occupying the city for those days. But we've got to take care of that moment. And that's the part where we're kind of asking not only our staff, but the convention attendees to be a little bit nimble about between now and the convention. Is we may have a different requirement for what we're focused on in that moment based on what's happening on the legislative calendar as we go from February to March, as opposed to January to February, which is, an eternity between now and then.
Yeah, great point. And we talked a little bit, when we talk about training and education, it looks to me like there's more breakout sessions than usual on the agenda for the Monday, Tuesday, where we're actually in the convention hall at GAC, which I love because that's the piece that I really enjoy. And again, there's no shortage. I'm assuming we'll be diving into some of these issues like AI and interchange. I haven't seen the actual list of the breakout topics, but
yeah, we've got operational issues that are consuming for credit union leadership that need to be addressed. Legislative policy. We have an entire breadth, a full bevy of issues that we need to talk about. Some of them are more pitched than others, but they're just a whole bunch of things a lot of ground that needs to be covered. And then to take advantage, we've got great events and education and training team that has put together solid programming. So I think if as you're standing at the buffet that is the GAC, you're gonna find plenty of things to enrich your career, to challenge your thinking, to inspire you to use your own passion to reach out and defend the credit union business model.
And I know it's on the calendar for March 1st, which is a Sunday, all the way through Thursday the 5th. And based on what you're saying, don't shortchange it. Make sure you're around. I know I'm going to be arriving on Sunday morning, and really looking forward to it.
Absolutely. Everybody needs to carve up, take your vitamins, because it's an endurance game. Got a lot of work to get done in those short days.
Scott Simpson, President and CEO of America's Credit Union. Really appreciate you taking the time. People want to find out more, I assume. I mean, it looks to me like you got a pretty good registration list already, but still time to register at the GAC website?
Absolutely. Yeah. Go to America's Credit Union's website. And yeah, there's room for registration. If you're a vendor that's trying to get on the trade show floor, you might be out of luck. That has sold out a little while ago.
Amazing.
There are other opportunities to find a platform there, but yeah, don't hesitate. Reach out to our team. We've got people ready to help in lots of ways. So yeah, we'd look forward to getting the family together.
Don't hear that one very often. Vendors, you're already sold out. That's a nice position to be in.
This is the big one, right?
Yeah.
We're just grateful to have everybody coming.
Scott, thanks so much. See you in about a month.
Thank you, Glenn. It's a pleasure.
So I will be there in Washington, D.C. on March 1st, and I'm very much looking forward to the Government Affairs Conference. We'll, as always, be tracking down interviews there, and I've already got set up to speak to the America's Credit Union's economics team. They'll be doing their economics update and outlook for 2026. We always catch up with them right after that and do a little bit of a deep dive on their information. So very much looking forward to that. Hope to see you there. If you're heading out to a Government Affairs Conference, do let us know. We'd love to know and track you down. Our friend Mike Lawson from CU Broadcast will be there, as well as our folks who helped us with the year-end roundup and the predictions. Lou Grilly, Ann Legg, John Janklius. We may be kind of passing the mic on that one as well. I just got back this last week, which is where I sourced this interview with Barlow Research's Sandy Hansen. I was at Deluxe Exchange down in Miami, client conference for the Deluxe Corporation. It gets better every year. About 700 people, I believe, were there. Some really great content. One of the two keynote speakers, I'm not sure if you call it a keynote, it's a fireside chat. Michael Lewis, the well-known author responsible for a series of books, The Blind Side, probably his best-known one, more relevant to our space, The Big Short, Moneyball. He discussed all of those as well. He really blew me away. He was a very, very compelling speaker, and he spent most of his time talking about Sam Bankman-Fried. He did a book fairly recently on Sam Bankman-Fried called Going Infinite. And to his credit, he was fairly humble and basically kind of falling on his sword and saying, I got some flack for this book. They felt I wasn't hard enough on him, and in hindsight, maybe I should have been harder. But he had some really, I just want to share a few insights that I picked up with in terms of his conversations. He really trailed on a very close basis Sam Bankman-Fried for quite a bit of time. He mentioned FTX itself was, this is a quote from Michael Lewis, was actually a very good business. It was a high quality crypto exchange. He didn't need to take his customers' money. And then he points out that when there's that degree of opacity, no one is allowed to really ask questions, and that's never a good sign. And that feels to me like that whole "they just don't get it" kind of mocking dismissal of any concerns that we've seen in a couple of other cycles. So he really kind of got into that point about be very wary when you start having FOMO about these ideas, because he really got to the point. I always talk about trust in this space. He points out when the market's moving so fast, you're kind of thrust in a position when you're required to trust people like this if you want to be involved. Another twist that I hadn't heard before is, he was taking this money that, was supposed to be customer funds, and he basically kind of was building out a VC portfolio, a venture capital portfolio. And again, as Michael Lewis said, he was actually pretty good at it. He was doing things he shouldn't have been doing, and that is the reason he got in trouble and the timing was bad. But as he pointed out, they bought a 20% stake in Anthropic. I mean, that would have paid off really well if only the criminals had more, if it weren't for those meddling kids. I think let's just put it down to that. But he was not excusing Sam Bankman-Fried at all, but he also had some pretty interesting twists to it. As I mentioned, I'll be at Government Affairs Conference, and I'd be happy to talk more about some of my impressions of this conversation, because we spent plenty of time on FTX here as well. But as I mentioned at the Lux Exchange, I also had a chance to speak to Sandy Hansen. Always love the content they have around the small business space and the voice of the business customer from a financial services standpoint. So with no further ado, my conversation with Sandy Hansen. I'm here at the Lux Exchange with Sandy Hansen, the managing partner of Barlow Research. And Sandy, good to see you again. I know we've talked before. I love the research voice of the business customer focused on financial services. Really interesting research that you do on a regular basis.
That's right. Yes. Thank you. Thanks. It's good to see you and good to talk to you again as well.
So you did a session this morning, and this is, would you call this kind of your flagship survey that you do on a regular basis of small businesses?
Yes. We've been doing the study that I talked about today. We've been doing that study since the year 2000. And on a quarterly basis, we're going out and surveying thousands of small businesses each quarter.
And so you've got time series data that goes all the way back. Now, it's not a panel, so you're surveying new businesses every time.
That's correct. Yes, we're going. We get a fresh list from Dun & Bradstreet every quarter. It's pulled as a stratified random sample. We don't allow anybody to respond to our survey more than once every 8 quarters.
Okay.
So
a couple things that I took away before we get to the real kind of meat of it is, 6.5 million small, medium-sized businesses by the Barlow definition, of which 80% are under $500,000 of revenue.
That's right, yeah.
And you mentioned that your definition is between 100K and 10 million.
That's right.
And I think you said the SBA has a much larger number that they consider small business.
They do. Well, business count in general, they look at, I think it's around 30 million businesses across the country. So they're obviously going below our threshold of 100,000 and above as well.
And it's the below part
it's
that
the
really
below
makes
part's
the number
the
explode.
big number, yeah.
And that's basically what you're considering kind of the gig economy. They're sole proprietors, but they don't qualify, kind of probably fall below the threshold for true business banking services. And that's the reason why you don't look at that?
That's right. Yeah, we know it's a big part of the mix out there. We're not saying they're not important customers, but what we like to look at the 100,000 threshold for is that's when they're really becoming serious small businesses, if you will. They are, as you said, they're using those business banking products to run their business rather than relying on their personal banking products. And using those personal checking accounts, personal credit cards, things like that, they've moved into those business products.
One of the takeaways, I know we've talked about this in the past, is that the average age of a business owner just continues it's now over 65, right?
Well, I think it's 65, so it's just 65, not over quite yet, but it is ticked up, year after year, and we now have 56% that are 65 plus.
That's what I'm remembering. Over half
are in that 65 plus category.
So we keep waiting for the great transition, and I forget what the percentage was. The majority of them do intend to transfer their business to somebody else. The liquidation is a relatively small number.
Yeah, well, just shy of all small businesses say they have transition plans in the next 5 years. It's 41% say they're going to transition. Of those who are planning to transition, 65% intend to sell. So we should see some bringing in of the new guard, if you will, in the next few years. And it's a fact, unfortunately, it's a fact of life. Nobody lives forever. So what I think we're seeing is that these small businesses are waiting too long to make the plans. And once they do, they realize that there may not be the valuation that they were hoping to get. So they hold on a little bit longer. And I think we've just continued to see that over the last, few years. But it unfortunately likely will be a health related event, either for the owner or an owner's spouse, something like that potentially could take them out of the game.
And that disposition could be to the employees, to an outsider. I mean, a roll-up could be obviously in the works for some of these types of businesses, or to family members, anything, all of the
Right,
above.
all of the above. For small business, I would say most likely it's going to be that family member or a third party. A lot fewer will plan to sell stock or
There's certainly,
sell,
at this size, IPO
right,
just doesn't make a lot of sense at the, maybe at the absolute high end,
Yeah.
but that's about it. One of the things that really caught my attention, you mentioned where these small businesses bank, and the percentage that bank with, I think you defined it as the top 30 FIs in the country, has been declining.
Declining slightly, yes. So we've seen that drop just slightly, maybe 3 to 4% over the last few years, banking at those large banks, which we define as banks with assets over 50 billion. Really where we've seen the bigger shift is that we've seen more customers, say a medium-sized institution, that would be a bank with 1 to 50 billion in assets, is their primary bank versus a small community bank having less than $1 billion.
So it's actually the medium banks gaining at the expense of the small banks.
Yes. And if you were to slice the small business market, though, and look at it by sales size, that's where we're seeing the large banks, those over 50 billion assets, taking more dramatic hits. So in that segment, the 2.5 to 10, the medium banks are gaining at the expense of small banks and large banks.
And then you have, I thought this was interesting, again, given our credit union focus on this podcast, you've got the other category, non-banks, and that is, I think, 9% now, and that is primarily credit unions.
That's right, yeah.
And that number is increasing from a small base, but it is increasing.
Yes, it's slowly ticking up. I would say maybe 3% or so over the last 10 years, but
Which
that's
is still 50%,
pretty
right?
big gains. And we're seeing credit unions come out with business banking products more and more today. So they're just going to be a more viable option for many small businesses.
And probably, again, on that very small end of the scale. Right?
Yes.
I think that's very interesting. Another thing that we talked about a bit is the digital, the desire to have digital capabilities, and that may vary by the type of bank as well. But digital, I think what was the phrasing used? Digital convenience doesn't replace the branch, which I thought was really interesting too.
Yeah, again, with most of these small businesses being in the micro segment, when you think about the relationship they have, everybody wants a relationship. What the relationship looks like is just different based on the size of the company. So for those smaller companies where it's 80% of the segment, the relationship is with the people at the branch. It's the upper sales end that has the relationship with the banker. So I think that's why the branch is so important. When you think about a small business owner on the lower end, they maybe have 8 employees. So they have to do the day-to-day. The owner has to do the day-to-day for their business, but they have to do the finances. They have to do the HR. It's a lot of hats that they wear. We always hear that term. So banking is not at the top of their list.
Job, yeah. That's the thing you do at night at the end when everything else is over.
So they want to walk into a branch and just ask, hey, how do I set up a wire transfer? Can you set up a wire transfer for me? I never do it. I have to do it. You do it for me because I don't want to mess it up. Versus that larger small business, they have a CFO or a treasurer. It's their job to do the finances. They're comfortable setting up an online wire transfer themselves.
I remember there's a statistic in there someplace that when you think about what their criteria was for a bank that they were looking to work with, or a financial institution, online digital capability was important, but branch was every bit as important. It was pretty much maybe with the exception of the very largest of these businesses.
Exactly,
right?
That's right. But in the larger business, then access to an account officer comes up. So we see this difference in that conveniently located branch, if you're there to choose a new primary bank, declines in importance as the sales size of the company gets larger, but access to an account officer increases. So again, what is the personal relationship? It's either at the branch or the officer.
And the other one that I was really surprised by is of the checks that are being deposited, half of them are still going to the branch as opposed to any kind of mobile deposit or remote deposit capture. That was much higher than I would have expected.
Yeah, so it's a preference. Where do they prefer to go
Right.
is what we track. So, but yes, over half of them say they still prefer to go to the branch to do their check deposits.
And similarly, again, that skews toward the smaller ones.
It does.
And I think you said something about, the typical small business has 8 FTEs, and that I think was across the board. So we're kind of, we may be in an average mean versus median kind of situation.
That 8's for 8 number of employees, that'll be more at the lower end. You move up market, they're going to have maybe 30.
Sure.
So they're more likely to have those, people in the finance roles.
But I'm guessing there's a whole bunch of them at the lower end that are 2 and 3 and things like that.
Yes.
So this comes out quarterly. I mean, how much movement do you see? I mean, are there which of these metrics have kind of anything surprised you of what's had the most dramatic increases or decreases over the course of the last few cycles?
We finally had seen some movement in that preference for where they want to do things and where they want to apply for things. We finally saw some movement in the preference for them doing things via online banking over the last couple of years. But in the most recent data, it's dropped back down again, and branches kind of come back up. So I'm not really sure what's going on there with that information or that data point, but that really did surprise me, because I thought, oh, okay, we're finally starting to see this move, but now we've come back down.
I kind of, causation, correlation kind of thing. I was thinking about this with the credit unions gaining. It seems like credit unions' brand strategy tends to be still a little more brick and mortar centric than the larger institutions. Well, if the preference goes toward having a branch, it may help to explain why maybe some of that share shift's taking place.
It could be. Mm-hmm.
So if people want to find out more about, this is part of your standard subscription package. I think what you have, I forget, a fair number of the top banks in the country that subscribe, right?
That's right. And some of the mid-tier size as well. So it's a program that we really customize and try to get it in to fit their needs. But it is our small business syndicated research program. It's an annual subscription that they can subscribe to. They get quarterly deliverables. They get annual report as well as a presentation of that information to their teams. So a really great access to a lot of information throughout that year a member.
And you do customized research on a multi-client and individual client angle as well.
We do. So custom research needs, if you have those, we can survey customer lists, do customer relationship audits. We have our own panel as well, so we can do what we call flash panels, where we're able to get information back from the field really quickly on a custom question that would be owned for that financial institution that commissioned it. As well as we have a middle market banking program looking at companies 10 million to 500 million, and a program specifically looking at digital banking, both the online banking platforms as well as mobile banking platforms.
So this is all voice of the business customer for financial services.
That is right.
And if they want to find out, where is it, barlowresearch.com?
barlowresearch.com, yes. Or you can email me directly at shanson, that's SHANSON, at barlowresearch.com.
Sandy Hanson, Managing Partner, Barlow. Thanks so much.
Thank you.
With that, another big cast in the books, and a somewhat longer one than usual. I appreciate you hanging around for the full thing. I hope you found those two interviews as insightful and interesting as I did. Again, my name is Glenn Sarvati. You can find out more about the Best Innovation Group by checking out the website big-fintech.com. If you go to the Media tab, you'll find lots of our past episodes. If you go to places like Spotify and Apple Music, that's another way that you can track down our podcast. And if you subscribe, you'll find out every week when we put out a new one, which is typically on Tuesdays. And if you go to the website, you can always find out all the past episodes too. Next week, we'll be back. I'm actually on my way. By the time you're listening to this, I should be in London at Finovate Europe. And as usual at those, I'll be watching for my favorite of the presenting companies, and hopefully have some interviews with some fintechs that you haven't heard of before. I can tell you that the presenting companies, the majority of them, I am not familiar with. And that's exactly the kind of conferences I like to go to find out what's going on new in the fintech space. You can always find out more, not only at the website, but checking out the Best Innovation Group at LinkedIn. You can find me via my firm, 154 Advisors, on LinkedIn as well. As I said, back with more next week. As always, thanks so much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big Fintech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.